Just describe, in layman's terms, if you could, how devastating you think it would have been if the worst had happened and the economy had frozen up completely. How would it have affected people's daily lives? How did you think about it at that time?
Hank Paulson said at the time, in that week in September, we were 3 days away from ATMs not working. But I think the best way to describe it was, it would have been one of my colleagues at the New York Fed said this at the time, it would be bread lines across the country for a generation, just like the Great Depression.
Did you feel that at the time?
Oh yeah, I think we felt, we had like the balance of terror.
And what did that feel like, though, in the moment?
Well, it was a crushing burden of responsibility. And I think the hardest thing was just trying to figure out what would work. What could we do? What was the art of the possible within the constraints we had?
Was there a moment at which you thought it wasn't going to work? That we were going?
I think there were two scariest moments. The first was those weeks around Lehman weekend, before we had the tools we needed to break the panic and fix what was broken and prevent a Great Depression. Because that period up until when TARP was passed and Columbus Day weekend, we were managing with duct tape and string. We had very limited tools to contain what was going to be was clearly the worst crisis in generations. So that was terrifying. After the election, that time between administrations, we had thrown tremendous financial force at this. We'd recapitalized 75% of the financial system. We'd put trillions and trillions of dollars behind the financial system, and it wasn't enough. The economy was still collapsing. The system was still frozen. And we were trying to figure, okay, what's next? What might work? That stuff we did was necessary, essential, bought some time, helped cool the fever of the panic, but it wasn't working yet. And that was scary too.
Did you know after the rescue of Bear that Lehman was next? Was it clear to you then?
Well, I think it was clear to most people that Lehman was the weakest of the remaining large investment banks. At that point there were four left: Lehman, Merrill, Goldman, Morgan Stanley. And Lehman, even then, was perceived as the weakest among them. And if you look how they traded in the market, you could see that in the price too. Why was this crisis so terrible? It was terrible partly because we had this huge boom in credit financed in very dangerous ways with a system vulnerable to run. But it was terrible mostly because we didn't have enough degrees of freedom to contain the damage to the economy, to protect people from the effects. And that was because we didn't run the country with a bunch of authority ex ante for the firefighters. And people were not willing to provide that authority until they were convinced it was going to be terrible. And they couldn't begin to be terrible until it was past the point of no return. So in some ways, he was a microcosm of, I think, what you could see across the political system at that point.
You think that these tools, which are now in place,
No, I mean, tragically, if you look at the system today, we're much better off in some ways, but we're worse off in others. We're better off in the sense that we force the system to run with much greater constraints on risk, much tighter limits on risk taking, much higher capital ratios, much less leverage, and those are applied more broadly. That's a hugely valuable thing, and we want to preserve that. We want to be eroded by time or by deregulation. It's a very important kind of thing. But those need to be complemented by emergency authority in the event defenses fail. And the emergency authorities, I would say, on net are weaker than they were even in 2008.
By the way, do you remember the decision not to invite Dick Fuld down to the Fed and the conversation around that?
I just think I just decided. I don't remember much of a conversation around it.
And you decided it because?
It seemed like the right thing to do at the time. It seemed like it would have been a little awkward, complicating.
And then do you remember the next weekend? They called you eHarmony that weekend. Trying to hook up the different banks.
Again, just
to merge with each other. I don't know if they called you eHarmony to your face. Probably not.
No, not to his. Do you remember just again for context, this is before Congress. After Lehman weekend or Sunday night, Hank flies back to Washington to talk to the president and convince the White House it was time to go for emergency legislation that we had spent the summer with the Treasury and the Board of Governors trying to lay out, work out the outlines of. But at that point, it was, I think, clear to everybody that we weren't going to get through this with the limited tools of the Fed. But there was this gap between when they decided to go for legislation, when Congress was going to pass legislation where the system was falling apart. And we did a range of things to, we helped backstop the commercial paper market. Treasury found a way to guarantee money market funds. We put a bunch of other guarantees in place to help stem the damage, but it wasn't enough. It wasn't even, to me, slowing the pace of the run in the core of the system. So one of the tools we had left, which is a very weak tool as you've already seen, was to figure out, could we induce the relatively strong to acquire the relatively weak? And so we did spend one weekend unsuccessfully trying to see if we could arrange some more stabilizing mergers. That was a low probability thing, but it was not successful. But we came up with a relatively good idea, interim idea instead, which is to agree to make them bank holding companies, and therefore at least have the perception of greater access to support from the Fed on the condition they raise private capital. And they were able to go out and raise private capital, Goldman from Warren Buffett and Morgan Stanley from a Japanese bank, large enough that combined with the bank holding company umbrella, bought them a little time, but not that much time. Even that set of things was not enough, given how much momentum the run had.
So if you go to that Saturday, you call Lloyd, you tell him that he is supposed to call Vikram Pandit.
Yeah. There's a bunch of avoiding of phone calls then too. people knew that sometimes it was hard to get people on the phone because they knew they weren't going to like the conversation they were going to have, and so there's a bit of avoiding calls for a while.
Who was avoiding your call?
I think all four of them were. They weren't all avoiding the calls, but there was some. They knew it was going to be an awkward conversation, and we were trying to, in some ways, make obvious to them the reality that it was an existential moment for them, and they had to consider the unpleasant, had to consider the inconceivable.
Mid-October, TARP is now passed. First of all, do you remember when TARP first went to the floor? Do you remember where you were?
I think all I remember is, I can't remember where I was when it went, but I remember Hank calling me when the vote failed. It's just like an amazingly compelling person, real human person in his raw directness and power. And I remember him calling me and apologizing to me for the fact that it failed, because he carried so much of the burden of that. And of course we were all scared at that point about what happened, but I was very confident Congress would do it. It was inconceivable to me they wouldn't do it. It might take a little longer, but anyway, I remember that call, not knowing where I was when the vote actually happened.
Do you remember going to Washington when everybody was called, when all the CEOs were called?
Oh yeah. I went down. We were trying to figure out. Okay, we have this authority now. What's the best use of that authority? What was going to be the highest return on that mix of authority? And we came up together with a plan to effectively put capital into most of the U.S. financial system all at once, put a large slug of capital in, and to the FDIC's credit, because they were willing to do it, combine that with a guarantee. They would allow them to borrow money at some fee to the government. And so I went down to Washington that Friday night, I think, Friday afternoon, to help Hank and Ben and Sheila Bair and John Dugan try to figure out how we would execute that plan.
Did you think they'd take the money?
I thought so.
Because you had to make it sort of voluntary, but sort of not.
Yeah, we just, one of the dilemmas we had was that all these institutions were showing capital ratios that were still above their regulatory minimum, and a bunch of them were able to say, we have enough capital. And a bunch of them in the room, I think at that point, one in particular said, we don't need your capital, we have plenty of capital. And I said, you may not think you need it, but you're going to need it. And one reason the crisis was so terrible is that to protect themselves from the risk of failure, they're all cutting lending, pulling back on the oxygen the economy needs. That was making the recession worse, the panic worse. And to break that, you had to, give them a backstop that would allow them to continue to lend. And so we weren't sure, we were pretty confident we could make it compelling to them. In some ways, financial systems they're just a dark mirror on society, because what they do is express this complicated mix of hope and fear, desire for returns that are higher than you can realistically expect, or the belief you can borrow safely a substantial part of the value of your house or against future income, and have that work out even in recessions. And the financial system just reflects a set of beliefs that are human, a human set of beliefs. Sometimes there's too much optimism, and sometimes it flips the other way and goes to panic. These things, financial panics, they're like savagely damaging, and you can't protect economies from them without doing a bunch of things people find pleasant, like providing a bunch of support and assistance to the institutions many people feel were at the source of the problem.
How did you think about that issue? This idea of people would say, we're privatizing the gains and socializing the losses.
The reason why financial crises are so damaging and so bad and so tragic in their impact on people is because most governments sit there inert and wait and fall way behind the curve and don't do the things you have to do because they're worried that the actions they have to take to prevent a panic will be perceived as unjust and immoral and will make them unpopular, and they'll lose their jobs if they do it.
There was a report that during the Lehman weekend, there was a team inside the New York Fed that actually found that Lehman was solvent, and they'd written a report, but the report never got to you.
Yeah, I've read people who've written that, but I've never found anybody who'd claim that was true. And we went back and did a pretty comprehensive email search afterwards to see if people could find evidence of that, and they couldn't find it. And I don't believe I've seen any evidence in the years since then that justified a judgment that again they had enough we could lend against to save them. Our view was, if we lent, we'd be lending into a run, just finance the exit of $500 billion of creditors and be left with a huge mix of losses ultimately.
Did you ever put your own team though on trying to figure out what that solvency number was?
We had there's no solvency is a hard thing to judge, but we spent the entire weekend trying to figure out how much risk was there and what risk would a willing buyer be willing to leave behind. But we never thought, like we never thought in the Bear case, that we had the ability to lend them enough on our own to help them survive.
So related to that, Financial Crisis Inquiry Commission comes out and says that you guys came up with a false justification not to bail out Lehman, that the real reason was political fear.
I don't believe that's true. And Hank and Ben have written about this openly. They publicly in the initial days after Lehman's failure did not want to say that we had no option to save them on our own because they thought that would be damaging to confidence in the midst of an escalating crisis. They thought for them to declare at that point that we had no options available to protect people from the panic would make the panic worse. And they wrote about that afterwards. So it was only a few weeks later, or months later, in testimony, I think, where Ben first and subsequently I was able to explain what the limits of our legal authority were. I think that did add to some of the myths or the fog of confusion around the events of the weekend.
Oftentimes people look at the financial crisis and they say it was a crime. And there were criminals involved in all of this. And nobody went to jail. And as somebody who was in the middle of it and who spent a lot of time with all of the players, how do you think about that?
It feels like a deeply unjust, deeply unfair thing. You had so many innocent people that were responsible, lived relatively prudent lives, vulnerable to a set of things they had no control over. It's just deeply, tragically unfair thing. And of course people want a measure of justice for that. Of course they do. And it was, I think, a big part of the anger and disaffection that followed the crisis, that people didn't feel like there was a measure of justice.